Welcome to the Trading Lounge and the European Indices Report. We'll look at the Stock 50, the DAX, the FTSE, and I'd like to look at Barclays and also the pound as well. So starting with the Stock 50 here, our pathway is for higher ground, and on the Stock 50 here, being at 3,000 here, we can expect a corrective pattern in this space here. We're looking at 5 waves moving to the upside here. The European markets are displaying a really nice 5 waves to the upside here, whereas the American markets are really struggling at that point. But the American markets are running into their 61.8% retracement level as well, and that's partly why they're struggling technically, charting-wise speaking. So on the 2-hour chart here, as you know, we were looking to short this market and cover it at the 2.8 and then turn long. And if that's the case, then we need to exit at this point here. It may go a tad higher. It's not a big deal, but we would be looking for a corrective pattern that would pull back 61.8%. So we can be looking somewhere in this sort of space here. You know, and obviously we've got the referendum on Thursday, and the results probably won't be there for Friday. I need to double check on those times in particular. So yeah, I mean, personally, I'm not going to be trading through this. I'd rather be safe than sorry. I don't want to be involved in something that I don't know, based on a 50-50 bet, will they or won't they, so to speak. There's a slight advantage, of course, that they will stay in, and that's partly why we're seeing the rally here, but that could dissipate at any time. You know how voting can change or even get manipulated and so on. I'm not a conspiracy sort of person, but things occur. Now, the DAX here as well, we'll look at the DAX, which is obviously the same here as well. So looking at this as wave 1 and 2 here, and looking for higher ground here. Nice to see it move through the 10,000. So I'm just going to cut through to the 2-hour chart, then the 15-minute chart. So on the 2-hour chart here, nice impulse wave to the upside here in terms of 1 and 2 and 3 and 4 and 5 here. So we're looking for the wave 1 here. 10,000 seems to have disappeared here, major trading level. But the main point here is that if you've been trading long here, then this is where you would be looking to cover this long trade here. So I'm going to just grab that target thing here and put it there, and that's it. So those can be covered, and we're certainly, after 5 waves, we're looking for a corrective move. And well, we'll start with definitely the distance that does move above here will be the distance that moves below at that point. Now I want to move. I can go to the 15-minute chart here. So this is no real change in the count that we looked at yesterday, basically. Look, it's just continuing to move up, and look, it can go higher as well into the last moments as well. I'd need to look at the cash market for this. I wasn't really quite sure about if I should put wave 4 over here. It seems right. If that's the case, and we've got an extension, well, we can have all of this as wave 1 and 2 to here, and all of this is the third wave that's not finished in 1 and 2 here, and then 1, 2, 3, 4, 5 here for that one, another 4th, another 5th for that, then a 4th here, then a 5th for this one here. So it can actually go higher here, but we would be looking, once this is completed in this space, then a corrective move there. Now I'm going to drift over to the FTSE here, and with the FTSE here, we're seeing the same thing occur here. We can label this as wave 2 here, and looking for a move to the upside in 5 waves in terms of 1 and 2 and 3 and 4 and 5 here, then an ABC back into this area here, and then further up there. But as you know, I've always had a bearish count on the FTSE in line with the Australian market. So I'm still not convinced about the bullish pattern for the FTSE. Okay, so in this on the if you're long in this market, then exiting in this space up here, because we do have a nice 1, 2, 3, 4, 5, exactly the same as the DAX, and the 6-3 would be the target. And yeah, because it still points out to me that it's still possible that the move up here we've got as wave 1 can be the A wave, and then an A and a B and a C for the B wave here, and 5 waves up for a C wave here, and then unfolding to the downside. Now, this is the, in the video area here, we kind of talk about possible other counts, which is a bit annoying because it brings in sort of a lack of confidence in a particular direction. But I do think it's important to talk about it, because I don't want traders thinking that going long here through the Brexit is going to sort of pan out for us, because it could certainly work in the opposite direction as well. So one of the reasons with this A, B and C here comes in onto the cable, the pound. So I'm going to bring that over. So this is the pound on the daily chart here, okay, the cable. So in this case here, we've got from this wave 3 here, we can look at this as an A and a B and a C for the A wave, an A and a B and a C for the B wave here, and then 5 waves up for the C wave for wave 4, and then looking for a new low here for wave 5. So this can really be the same as the FTSE as well. So this is what sort of concerns me a little bit. I'm going to be doing some more work on this today, and hopefully I'll have a resolve for you on the next video for this. Okay, so but we are looking at the pound having this as a wave 4 here, and this kind of lines up with the banks as well. So if I can bring along Barclays Bank on the daily chart as well. So this was the March-April low area here, and on Barclays here for the daily chart, this is also, well, the March-April low here. So it's kind of doing the same things as well. So it's also quite possible for the banks in the UK to do the follow the pound, so to speak. So having this as an A and a B and a C here for the A wave, and then a B wave here, and then 5 waves up for the C wave into this space here, because this would be anyway, but basically into this space, the same as the pound, and then having one more move down here. Okay, so this is a real concern, and it's just sort of dawned on me because I like to explore things. So it's really important that you don't risk a lot of capital on this Brexit thing. I won't be trading it. I don't want to be exposed to a 50-50 bet on the situation. And George Soros was saying that by his calculations, if there is a slight census to remain in the EU, but if that's not the case, then the damage could be quite severe. He was saying that that it would be more damaging than Black Wednesday, which was the Euro mechanism pulling out. So it can be quite sort of severe. So sort of be sort of careful about that, and I like the quote that I put into the end of the video today, which was also by Paul Tudor Jones, and he's saying that that a cotton trade was almost a deal breaker for me. It was a point that I said, Mr. Stupid, why risk everything on one trade? Why not make your life a pursuit of happiness rather than pain? And so I think taking these sorts of bites of wisdom on board is a certain thing. And like I said earlier in the week, it's no point in a particular move happening in a particular direction, and you had an inclination to go in that and get stuck in the woulda, coulda, shoulda. I think being safe and sorry and mature about it is certainly the way to go with this situation. Look, that's it. I'm going to do some more work on these redo all these trends that have been coming down here for the banks, and get some sort of idea, double check everything. But I just wanted to put it forward, and not that I want to put fear into the situation, but we just need to work through things as always. So alrighty, cheers.